Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. This is the drstoxx.com site, and if you want to join us and a whole bunch of great traders in the live trading room where I'm coming to you from today, you can go over to drstoxx.com, drstoxx.com, go to the subscribe menu, scroll down to the live trading room. You can add on our newish, almost up to 1 year now, live options room at a 40% discount. And we just are hitting all-time highs. The market's in great shape. All the right sectors are doing the right things. It's not a throw the darts at the dartboard kind of market and everything is going up. It's still have to be very selective, and we've been in some really nice spaces every day. Eight days in a row, we've closed on green, and each day has given us a new all-time high for both of the rooms. And it's just been great. It's been fun to trade this market. Hasn't been perfect. We never are perfect. The market isn't always doing what we want it to do, but it's been profitable, and that's really the bottom line, right? All right, so we're going to jump over to charts, and I'm going to start by taking a quick look, and this needs to be quick today, though I will. Oh, that reminds me. Let me move the Discord room over to the other monitor, so in case I get cut off, people can let me know what's going on. Silver just went green. Yes. Look at that. Look at that. So we've been long silver in the live trading room with AGQ, which is the 2X bullish fund for silver. And we started trading it down in this little rounded bottom breakout. We rode it for a little while. We got out. We got back in. We got out. We got stopped out on a profit over in this area right here. And then we've been in it ever since. Riding it up to new highs, and I really don't think gold and silver are going to slow down much over the next few weeks, maybe even months. Just the factors, you've got a decrease in supply for all kinds of reasons, and you've got a big increase in demand for all kinds of reasons. And of course, from the price, supply, and demand curve, right, that you probably learned in Econ 101. That's where I learned it. That only can cause prices to go up. So, okay, sorry, indexes, 7,000, we're at 7,000 again for the S&P 500. It has been a pretty tight and choppy market. It's up one day, down the next. And on an intraday basis, we're seeing some dips and rips. And if you're a day trader, this is quite a nice market because you've got a pretty clear line of support lows. You've got a clear line of support highs, and, trading 101, you buy the low and you sell the high. We're not day traders, so for the most part, I have done a lot of day trading, but just not something I want to do that much live in the room on Discord. It's just too stressful. I much prefer to do my research, to find a list of stocks that I really like or indexes that I think are going to break out, and then we put on the trade with our stop loss in place and our target price in place, and then we just let it run. We adjust the stops as the stock moves in our direction, but other than that, other than managing that, we do that on an intraday basis, then it's really just hands off and much lower stress. We really don't have to worry about all those little, jigs and jostles throughout the trading day. But having said that, it is interesting to note that we had a big flush out day yesterday. So it was a really negative day for the market. Took out a bunch of range lows, got below the 21 EMA, which is typically a kind of a scary place for a lot of swing traders. They usually like to stay out of the market when that happens. We don't, but some do. And so it knocked a bunch of people out, triggered a whole bunch of stops, and then it rallied all the way back up into the close. And we ended up with a nice solid up day yesterday. I wouldn't say it was huge, but it was a nice solid up day, despite a lot of our stocks going down. Our silver, our gold, our minor trades, we're also in platinum and copper, and they all did really well yesterday. Now they're all cooling off a little bit today, but still, as we just saw with silver, right back up to where they were. The NASDAQ is going to look pretty similar. It's not quite as strong. We're not quite at all-time highs as the S&P, but it's pretty close. And again, we're seeing these trading ranges, right? Trading ranges range highs, range lows. We have a break of the lows, bounce right back up again to the highs, back down to the lows. It's a little bit of some price exploration up here, which is to say that the lows are getting, the lows are kind of pushing down that level of range lows at support, and the highs are pushing up the level of resistance at the top. And that it is sometimes the kind of thing that you see when markets are getting a little bit tippy, a little bit toppy. And I've been saying this for a while now. I do think that probably this time next week, middle of next week, late next week, we probably will start to see a bit of a pullback work its way into the major indexes and some, at least, of the sectors. I don't think we're going to see a major pullback in metals, but I could be wrong. Gold, if anything, but probably not silver and probably not platinum. Um, and maybe not copper, but gold is probably due for a cooling off or a pullback. But I think we'll really see pullbacks in the major tech sectors, in the Mag 7 stocks. We're in some of those right now. I mean, we're in Apple and we're in NVIDIA and AMD. We've stayed out of PLTR. We've stayed out of Google, though Google's been good. Amazon haven't traded that for a while. Microsoft and Facebook we have in our long-term portfolio. They're not doing very well. But I do think that the whole group, really, the top guys, maybe Tesla will avoid some of this, but the rest of the group, and we're in Tesla also, the rest of the group is likely to come back in, maybe for a week, maybe a couple of weeks. It could be a bit painful, 3, 4, 5%. And I could be totally wrong, but all I'm saying is that we're just looking at a historic level here. Not necessarily the stock market has been rip roaring higher, but we've gone quite a ways. We had this one pullback right here, and this is the kind of pullback I'm thinking of. This was the big. It's not the tariff crash. The tariff crash was way back here, and that was ugly. That was ugly, scary, and run for the hills. It also turned out to be one of the best buying opportunities in the last 3 years. That's the kind of thing we love to see when we're in the market to put on long-term positions. This is where you want to buy your long-term positions, right? You just buy hand over fist and let them sit. Quality stuff. Buy high quality. Don't buy the cheap, junky meme stocks that only have growth and no earnings. But buy the quality stuff when you see that. When you see this kind of thing down here, that's also good, but that's more of a swing trade opportunity. And that's when you put on your big full-size swing trades. You go heavy into calls. You give yourself a little bit of room to the downside. But that's not the market we're in right now. We're seeing this kind of tight, choppy. Well, I love it when it's tight and choppy and heading higher. It's not so nice when it's heading lower, but the dips have been really shallow. And I think we're just due for something a little bit more than that. And part of the reason why I'm saying that is because we're starting to see, you can see it especially in the NASDAQ, starting to see these distribution days working in, right? A whole bunch of the selling pressure on the downside has been typically heavier than the buying pressure on the upside, right? The buying pressure falling off, the selling pressure getting heavier. And, like this happened over here and over here and over here. And those are typically the kinds of volume patterns that you'll see when the market is getting a little bit toppy. Now, it doesn't have to do that at all. It can still continue to be kind of tight and choppy. We just get a trading range, a tight, narrow trading range for the next 3-4 months. That can happen. But we are extended in terms of valuations for sure. Historically, never seen the valuations we're seeing now in the S&P 500 is up near 30. And historically, they typically are about at 20. That's historical PE, trailing PE ratios for the S&P 500 stocks. And it's also in a midterm election year that is the weakest of the 4 years of the presidential cycle. The midterm election year of the second term of the president, however, tends to be better than the midterm year of the first term. So we've got that going for us. And it's quite a wide range of returns that you get during the midterm year. You get some good years. You get some really bad years. Some of the worst years the market's ever had have come during the midterm year. And over 80% of all annual losses for the market under 10%, 10% or worse, have happened in a midterm year. So you have to be a little careful with what's going on. But then the most bullish 5 months of the 8-year market cycle happened right after the midterm election of the second term of the president. That's what is coming up in November, but that's that's a ways away. All right, so let's just call this a tight, choppy, fairly trendless market. Trendless because the LRC is rising, but look at our moving averages. 21 is fairly flat. The 50 is fairly flat. The price goes above the 20 and the 50 and then comes below the 20 and the 50 and then back above and back below. And that's really synonymous with the trading range or range bound market. Small caps are, I think, ready for a little I said this yesterday. I think they're ready to cool off a little bit, and they opened down, and then it's just been all up from there. Yeah, it is what it is. But it's not really. I mean, I've got my ETF trend letter in TNA, which is the 3x bullish version of the small cap index, and it's been a great trade for us. We've been in gold, silver, small caps. There was something else doing really well for us in that group. And anyway, it's the ATF letter has been really hot, but it tends to take longer swing trades than we do in the live room. The live room, our average holding time is about 3 days, 2.5 to 3 days. So we're in and out of trades pretty quickly. All right, let's take a quick look at Bitcoin. It is red today, and it's an inside day, bearish inside day bar. And the last time we had one right there, it went down for a couple of days, and then we had a nice rally back up. So all bets are off for Bitcoin. It did break out yesterday of this, what is that, about 95. 95K was the range high. I said two things had to happen for me to stop being bearish on Bitcoin. I was bearish on, where was it? Early November. Where is early November? Right there, that big red bar. It broke out through a bunch of range lows and continued on down on heavy volume. And it was about 105 when I said that, and it went all the way down to near 80. So 25% haircut for that. I said it had to do two things for me to kind of flip from bearish to bullish. I was really looking for 75. It didn't get there. It got to 80. I said, first of all, this resistance trend line right here has to break out to the upside. It did that a few weeks ago. And secondly, I said it's got to get up through these range highs around 95. That's a pretty significant, very significant level right there. It was ceiling, 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 and then it broke out yesterday. So those two things have happened. We can buy the dips on Bitcoin. I'm just not so sure. What I don't want to do is get back into Bitcoin and then get trapped, bull trap, right? So you could, if you wanted to, buy it on a dip like today. It's a minor dip, but it is down to the 95 level again, and put your stop real tight, like just a few, maybe 500 below yesterday's low. That would be a pretty tight stop, and then you've got all kinds of upside from there. So it's a good risk to reward ratio. It's just not one that I'm going to get into right now. Ether is a similar story. I won't go into Ether because I'm not trading Ether these days and don't really want to. The last trade we had in Ether was in the live trading room, and it was a nice win in shorting Ether. And ever since then, we sold that. We got out of it after it started to rally back up. I think it was this little move right here that we shorted it. And we took our profits and ran, and I'm glad we did because it's now much higher. Okay, gold. I said gold still going higher. Do a pullback, a technical pullback. I don't think there's any change in the supply and demand curve. And silver is silver is silver. Here's the thing with silver. So, it is used in AI. It is used in electric vehicles. It's used in industrial processes. It's used in home building materials. And so home builders have been, kind of quiet, and now they're starting to pick back up again with mortgage rates falling, or at least ready to fall. And that's going to prompt more silver. People are digging out of their closet the coins, the old silver quarters that they've had, all these years. And now there's this massive interest in collecting silver coins. So when those get out of circulation and into private stash, then there's less silver to go around and the prices go up. So demand, demand, demand. But it's really the demand is being driven by the AI and data centers and electric vehicles and solar panels and all those things that use silver oxide, silver compounds to catalyze their chemical reactions. Copper can do a lot of that, but it tends to be a little slower. It is cheaper, but it tends to be slower. Silver is still the best choice. And now platinum is starting to play that same role because it is the only metal that is strong enough to withstand the energy that is rushing through these processors. And so platinum is now in big demand for the very same reason. Okay. But here's the thing. Governments all around the world are shutting down mines for environmental purposes, for environmental concerns. And they make the regulation for opening up new mines so hard, right? It can take 3 to 4 years for a big company, despite all their lawyers, to open up a new digging facility. And so what they're having to do is they're having to go using their current mines, and they're going deeper and broader and wider. And, they're not finding as much silver as they used to because of those reasons. So if supply's going down and demand's going up at the same time, you've got the perfect squeeze. I don't think that's going to end anytime soon. All right, oil we're not going to talk about. It's way down today, and this is making Trump very happy because he wants $50 oil. It's down to 59. That's because we didn't bomb Iran and we didn't bomb Venezuela. Now, and I think we're going to bomb Greenland either for that, or Denmark. I think we'll stay out of that skirmish. Okay, so that's all I wanted to talk about in the indexes. Let's take a quick look at some sector charts. So we've got the small. This is interesting. Small caps are up today because TSM came out with a great report, and that's bringing up AMD and it's bringing up NVIDIA. But at the same time in the sector, if you look at the major semiconductor companies, there are different branches, right? You've got the fabless and the fabs, and you've got the manufacturers and the efficiency guys and all that. But if you look at that range of group, take the top 20 semiconductor plays, and half of them are red and half of them are green today. So that's, kind of a head scratcher. Software space has been awful, absolutely awful. AI is just taking a big dent there. And, when you can build your own Excel spreadsheet with Grok or Gemini, with just typing in a little bit of English, then why should I go to Adobe and pay them $150 a year for their license fee? So that's having an impact, and I think that's why you're probably going to see a lot of consolidation in software. You're going to see the big guys buying up the little guys, and that's a good thing. That's a bullish thing. And software is still a great. It's the best margin business in tech, right? So they just have to find a way of harnessing that AI power in that benefits everybody, right? The customer, end user, as well as the company. Okay, what else? Biotech is, that's not the biotech I want. Where's XBI? Biotech was up really nicely yesterday. We were in Labu, and we rode this one all the way up. We're still in Labu. It hasn't hit our stop, but it is coming back down. Inside day bar today, probably just a little bit of indecision before we do get, and we should get, a nice looking breakout over that range right there. Quantum names are green today, but it's hit or miss, like the semiconductors. You got to drill down into that sector and find the best ones. We're in IONQ, but I don't think it's doing that well today. And then here's the copper miners still going up. Silver, as I said, still going up. The homies have had a good run, big breakout, and same with the banks. So, no, I'm sorry, I meant energy. Energy is in breakout mode. Energy broke out very nicely, came back and retested the breakout line, and then up, 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 up. Now it's going to get hurt a little bit on falling oil, but some of the best value plays are in the energy space, and I do like the banks. They're right. We're pretty much now through all the big ones. having reported, and they were all pretty good. A little bit of concern about this credit card thing, right? The 10% cap on credit card interest for 1 year. Whether that actually gets passed or not, I don't know, but it is a concern for credit card companies. But what I like about this, it's not the best looking chart. There are much better setups out there, but it did come all the way down, tested the rising 50 period moving average. It's printing today a 3-bar reversal. Yesterday's volume was very good. Today is about average. And if you look back over the last few days, even with that big distribution bar right there on some earnings, that's been leaning on the bullish side. Okay, now let me take a quick look at the mags. I haven't really done this today, so we'll start with the worst. Qualcomm, yeah, this, as I said, Qualcomm, all the way down to the 20-period moving average. It did just close right at a support trend line yesterday after rallying back up into the close. It gapped up this morning, and I did kind of think, yeah, all right, this one could go. And no, and right back down again. And we're even below those lows, and it's the lowest. If it closes here, it's going to be the lowest close since late November. So not a good look for Qualcomm. As long as it's above the 200-period moving average, there is some hope for the bulls, but now it's got to get back up above the supporting trend line. Otherwise, that's going to act as a ceiling. So for right now, it's kind of a no-go zone. Google is still doing okay. It's not having a good day, but it's still been, it's right up against all-time highs. We were long some Apple. Yesterday looked okay. Today doesn't look so good, but it's going to take some time to kind of work through this little base. This could be a bear flag, which means if you're trading Apple, you got to keep a pretty tight stop because you'll know it. If it breaks through that range lows, like if it breaks through this low down here to around 254.70, you should be out. You should be out of that trade. PLTR, so a lot of interest in PLTR in my pro trading group. I see members in both rooms talking about it. I'm just not interested yet, and I probably won't be until it gets past earnings. It's interesting to me that PLTR is supposed to be a play on defense, and all the talk about bombing Venezuela and Iran and elsewhere earlier in the week didn't flinch. PLTR just did nothing, and it's still below the 50 and it's below the 21, and it's not bearish here. I wouldn't short it. No, don't short it. But I do think it's got to look better than that if it's going to start heading higher. Netflix, horrible, one of the worst stocks last year. Still horrible, still one of the worst stocks. Avoid. Tesla is good. So we had this little run up here. We bought it somewhere, and here's some calls in the other room. It hit the 21, has come back a little bit on an intraday or hourly chart basis. It is doing okay. It's not great, but it is printing a higher low right here. We just need to take out that higher high, and then we should get back to the trend. Inverted head and shoulders right here, left head, and this is a potential right shoulder. But it's not it hasn't been the trade that I thought it was going to be when it bounced so cleanly there and gave us 2 days of follow through. Just couldn't get up above the 21. Let me think else. NVIDIA, we'll take a look at NVIDIA, which is up modestly today on the TSM earnings, but it is one of the better looking mags. It's the second best mag and one of the better stocks in the semiconductor space. This was my map. So this is the map that I had. Actually, it started a little bit back in this area here. And I had this, I pretty much called this little bounce and break out of the pullback. And then I thought it was going to be weak, right? Whoops. And it was, just not as weak as I thought. I thought it was going to come all the way down here. And then right around this week sometime, the middle of the week, I thought this is when it's going to start rallying back up again. And I think that's kind of where we're going. So I don't think it's going to get all the way up to 210, however, before we see that market pullback that I think we're going to get. I'm thinking maybe 200. It hits 200, it flattens out for a week, and then it rolls back over into February. AMD looks great. It was a good entry we got on the calls over in the options room because it came right down to support and gave us a bullish engulfing candle on very good. No, I'm sorry. It was the follow-through day that was very good. Why did it gap up that morning? was it an upgrade? Something. There was some good news, and I don't think it was an earnings related issue, but AMD gapped up, rallied all the way up to the 50, and then it gapped down the next day. It looked, oh, that's it. It's done. It's coming back in. It's going to close the gap. No, rallied back up, gave us a close above the 21 and above the 50, and then a gap and go so far today. It looks great. AMD looks great. Now, where's it going to go? It's probably going to come up here and test the highs of the range, 262 or so. And we are in the 220 calls, I think. Anyway, it's doing well. Okay. So just a handful of other stocks I want to show you, and then I will take requests. So I mentioned the banks, so I don't need to mention those guys again. This is is this the consumer discretionary, or is it just, no, it's just all retail. This is all retail. So this is the 3X bullish version of XRT, which is the broad-based retail. So you generally have, take a deep breath. You generally have staples in the retail sector, which are, your Coca-Cola, your Colgate, your Palmolive stuff, your toilet paper. And I think they put McDonald's in there, and Walmart and Costco, right? The stuff you're going to be buying anyway, regardless of what the economy is doing, and the staples. And then you have the consumer discretionary, which Tesla's in there. You've got Amazon in there. A little bit kind of weird to put those guys in there, but they're there. And then you have, your high-end clothing stores. You've got your Tiffany's and things like that. Are cars in there? I think the cars are in there too. Your appliance makers, etc. So retail covers all of that. And I had this read on the XRT that I caught on to last week, and it was a reversal up here at the trend line. That's clear. Gap down, but then when it flashed on good heavy volume all the way up to break out. Came back down and tested again the next day, came back down and tested again the next day, but it kept rallying up into the close, and that is a signal that, yeah, this is ready to go. So we've got very good volume coming in. We've got a pretty fresh MACD buy signal. You've got the long range cycle coming down, and it looks like it's starting to flatten out near the lows. We've got the intermediate cycle, the green one, which is also important, rallying off the lows. And so from the cycle perspective, this looks like it's good. We were in IREN calls in the live trading room, and we got in the options room, we got stopped out. That was several weeks ago. Then we went into IREX shares in the live trading room, and we got a big winner, 22% in just a few days. Now I think it's the continuation of that trade, and it's a really nice looking chart. Let's look at IREN itself. So this is one of my favorite plays in the AI data center energy thing. It used to be a Bitcoin miner. Now it supplies energy through alternative sources to the data centers. And I am in long-term shares of this one that I bought last year. I bought this one, I bought some down here in June, and I bought some more in July. And so I'm in a pretty good place, right, in terms of my long-term average cost basis. And what we're seeing down here, rounded bottom after a significant pullback, always good, always a good thing, always a bullish. Doesn't mean it always goes up, or the market can do whatever it wants, but it means that the odds favor a continuation to the upside after it has weeded out a lot of those weekends. And it's a long, slow ride down, right? They just get tired and they get out and they sell. They panic sell down here whenever it gets down to the lows. And then, of course, they kick themselves the next day. But these rounded bottoms tend to give the market time to digest whatever it is it's digesting. And they're just much better than the V bottoms. The V bottoms tend to be too either panic driven or greed driven, and they don't work out nearly as often as the rounded bottom. So I like that, just that in and of itself. And then if you kind of squint, you're going to see something that looks like, I think this is it right here, and I could be wrong, but this is a little bit of a inverted head and shoulders. And if you take the 33.3 and you go up to the neckline, 46, that's a 13-point move. Breakout is right here, if I've got it right. And that is at 40, let's call it 44. 44 plus 13 is 57. And so we still have some upside, right? 57 to play out that pattern. And then if we want to be a little fancier, we can say, well, guess what? There's also this pattern right here, which is pretty much the same thing, just a little bit higher. You're going to get a little bit a bigger upside. So it's going to be 33 to 49. That's 16. 49 plus 16 is 65. So 65 is our ultimate target, if that's correct. And I think this is probably the right one because the neckline is horizontal. Okay, volume balance down here is very good. We've got a nice rounded bottom too in the MACD. That looks good. Okay, cycles aren't quite where we want them, but they're not bearish. They're not up at the top rolling down. They're mostly flat and rolling higher. So all that's good. Okay, Qualcomm we talked about. Serve was brought to my attention in one of the rooms. I think it was the options room yesterday. And I noticed this little bull flag forming and a nice big green bar today. A little more of a bull flag forming day today, not breaking out just yet, but keep an eye on this one. This looks good for breakout. I got into Poet when it was down here around 720. I mentioned it in the room. Maybe it was that green bar right there. I think it was that green bar. Mentioned that it was kind of setting up to do a breakout move. And I don't know why it rallied so hard yesterday, especially when software names haven't been doing very well. But it did really well. It was a surprise to me. I didn't think it was going to go that far that fast. And then a nice follow through today. I would say it's still actionable. You're probably going to get some, it's going to top out here around 940, and that could be a place where it dips again, maybe back down to 870 or so. But then the next leg higher should be there. And if you like it, a lot of people like this one as a long-term investment. I'm not there yet, but it seems to be doing really well in a space that's not doing well, and that's always a good sign. Now, last one, this is an interesting one. So some guy in my pro group he lives in Austria. He's from Austria. He's saying, hey, the Austrian economy is doing really well. If you want to diversify, consider buying some Austrian shares. Well, this is the only way of trading Austrian shares. This EWO, it's a exchange traded fund for the Austrian index. And I've been in this one for a while, and I have to say, I'm pretty happy with it. I mean, it's boring as heck, but it just keeps going up, right? I don't know what's driving the Austrian economy. I don't think the German economy is doing nearly that well, but they're doing something good. And I've got this nice little base here with lots of good volume coming in. I'm not the only one jumping on board this one. And the big cycle is down near the bottom, flattening out. That's what you want to see. Got a nice dip in stochastics. Yeah, okay, it looks a little toppy in MACD. MACD is a lagging indicator, so not necessarily a deal killer, but it is always nice when you get a fresh buy signal below the zero line, which you had back in this area here. That would be a nice place to get on board. I did not get on board there. I got on board right about in here, just before the end of the year. Okay, so that's all I have. So let me jump over and see what tickers you are interested in. And I'm in the trading main room. If you can type in, if you're still with me. Yeah, we've got some people. Okay. So you can go ahead and type in some ticker symbols there. If you don't have any interest in any chart analysis, don't worry. We'll just wrap it up. And I do have to wrap it up very soon, like in 5 minutes. Okay, let's do a couple of these here. DE. So I think Deere is doing something similar to what Caterpillar is doing. Let's take a quick look at Caterpillar. Right, so Caterpillar is doing great. This is one of my feature stocks in my last IBD live podcast, and it's just been so good, so strong, and I think it's just getting started. Deere, I suspect, is going to do something very similar. So what Caterpillar did was they latched into AI stuff, and they started putting AI applications in all of their tractors and their bulldozers and their diggers and the things that they make, right? And so you're a farmer, you're Farmer Joe, and you're going down the furrow, and you punch a button on your dashboard, and it says, the AI computes everything from the angle of the sun to the depth of the soil and to the chemical quality, and it tells you exactly what to do. You need this furrow right here. It needs a 60-70% mix of something, and so it makes farming easier and much more scientifically precise, and presumably that also increases your yield. If Deere does the same thing, the guy is driving his the big mowing thing that is you see around here, because people have these big lawns in South Florida, and it tells you, hey, you've got to dump a little bit of weed and feed over in that corner, or this patch here is not getting enough water, or whatever. I don't know if that's what they're doing, but I suspect that's probably what they're doing. And as far as the chart goes, however, I'm not going to speculate on the fundamentals here. As far as the chart goes, I would say this is a good looking breakout. It's not the prettiest chart out there. It gets really messy, right? So this whole area right in here is messy. I don't like messy charts. I will trade them every now and then if I really think the thing's going to break out. But the problem with messy charts is that when you get into a period of messiness, by that I mean up, down, up, down, up, down within the range, you're going to be stuck, and you're not going to make any money, and you're going to sit there for 2 or 3, 4 weeks at a time. And then, you're probably going to get frustrated. You sell it, and then it takes off without you. So I'd rather get in a trending stock at support. That's my favorite setup, or get in right at the very beginning of a breakout move, and ideally a little bit before it actually breaks out. So down in this area right here would have been the best place to buy, or down here at support around 460 something would have been a better place to buy. But if you're already long, it's a hold. If you're not long yet, I'd say, if you know the fundamentals, and if you know that it looks like it's going to be really good over earnings, because you're probably going to need to be in this one a while, then yeah, go for it, because it's going to get up here at about 530, and it might get stuck there for a little while. But the volume balance looks good. The cycles look good. The MACD looks good. Yeah, I think that's at least going to get up to 530, and maybe even before earnings. mRNA. So this one is getting a lot of love in the call flow. We saw that earlier in the room, and now we can see why. So yeah, this is a bullish recovery chart. mRNA, along with the other vaccine makers, has had a very, very rough time. And I don't know if they have overcome those things that have held them back for so long, but just looking technically at the chart, there's a lot of bullish stuff going on. This is not my favorite kind of chart. I don't like to trade charts that are down near 52-week lows when the market is up at 52-week highs. I want to try to be with the hot spots of the market. This is not a hot spot. This is a very cold spot, but it is making some bullish moves, at least in the short term. Look at all this volume balance, very strong. All that is accumulation. We've got a fresh stochastic buy signal. The cycles have rolled over. They haven't gone down very far, which actually is kind of a bullish thing in and of itself, as I'm learning more about cycles. It does have a very, very wide cup and handle right there. And if we were to, if we needed to find a target price, we would take the bottom, which is down here around 2360, the top, which is 35, call it 3560, it's 12 points. So from 35, just to say 35 plus 12, 47 is your target price, and it's only at 40. So you've got some good upside left. Yeah, it's a good hold. I'm not so sure I would buy it here, but a lot of people are buying it now. I will show you real quick. In fact, I already have it up. These are all the Moderna calls over 100,000, and you can see a big 1.2 million. Here's a huge 12.4 million, and this one goes all the way out to June at the 40 strike. This one goes out to April, 41 strike. You know what? This is what I would do if I were interested in Moderna. I wouldn't buy the shares. I'd buy one of those calls. That's what I would do. I buy the June. Buy the June calls. Give yourself some time. You're going to be out $7 times 100, $700. Buy a few of those, depending on what your risk tolerance is, and I would just hold on to those. The 41 strike, you're right there. So even if it gets up to 47, well before June, you're going to be looking at a nice $13, $14, $15, maybe more option. Okay. But what else? IBRX. I'll do two more here because I really do need to get back into the room. Oh my goodness, look at that one. All right, well, you know my rule on big green sticks. Don't buy a big green stick. So if you're long, hold it. It does look like this is the kind of thing that typically can get FOMO going. It's a biotech stock, so it is probably up on news or the anticipation of news. If it's in the anticipation of news, you got to figure out when is that happening. If it's an FDA approval or something that's like 2 days down the road, you don't want to be in the stock when that happens. That's a binary event. It's just a coin flip, and you could lose everything. So I don't trade these kinds of stocks. This is not my kind of chart. I'm looking at charts that are already uptrending, that have good consistent pullbacks and then bounces that are in a breakout mode. And this one is, it's kind of a penny stock that is just getting some excitement now. And also with these low price stocks, you got to be very careful that there's not somebody out there pumping and dumping. He's telling you to buy, and while you're buying, he's out there selling. It happens. Unfortunately, it's not legal, and if you get caught doing that kind of stuff, it can be price to pay. But just be wary that you don't want to get caught on the wrong side of that. So big green stick, my rule is you don't buy it when it looks like this. You buy it when it's down here in a much smaller frame, when you start to see the volume coming in. And then when it starts to get up to a resistance line like this, you see, how does it react? How does it react? If it breaks out, you buy the breakout. If it, you want to take a little bit more of a gamble, you buy it before the breakout, but you don't buy it up here. If you're long, keep moving your stop up. Who knows how high that can get, right? Who knows? Let me do one more here. All right, GS. Well, I think GS is going to look exactly like, no, it doesn't. Actually, it looks much better. I was going to say it looks exactly like XLF, the fund for banks, and it doesn't. It looks a heck of a lot better. This is a nice looking chart. All right, so this is what I'm talking about. When I say what kind of charts do I like? I like this one. Now, I will trade a variety of different charts, and like you saw with IREN, that's not exactly an uptrend, but this is a beautiful chart. Uptrend, uptrend, uptrend. 21 above the 50, 50s above the 200. That's stacked MAs. They're all moving higher. Every pullback is to the 21. It doesn't even get below the 21. That's just gorgeous. Now, big green stick rule will apply today. So, and I'm not opposed to buying the big green stick, but what you are better off doing is buying a starter position. If you're not in already, wait for a day or two, because you're probably going to get, like, this is a big green stick. You're probably going to get opportunity to get in lower. 50% of that green candle is typically where you see it come back to. And if it doesn't come back to that level and keeps going higher, you're in a very strong stock, and at least you've got a nibble in place. If it does come back, you can put a limit order to buy some more at that level. And if it keeps going through that, you got to have a stop somewhere down below. But that's a beautiful chart. I know it's up on earnings. That's the best time to be up. I guess the whole 10% cap thing is not a big concern. Does Goldman Sachs even do credit cards? I'm not sure they do. But anyway, the JP Morgan and your Citibank and your Bank of America, those are the guys that, Capital One, Visa and MasterCard, of course, those are the ones that have been hit the hardest. But this looks great. This is just memorize this chart, because this is a beautiful trending chart. Now let's go back and look at a couple of setups, right? So you've got, it's been trending for a long time. Trend, rounded bottom, breakout move, rounded bottom. Okay, then it kind of gets a little squirrely in this area right here. Does a little bit of moves, and then it gets another breakout. And then you have a long, almost a month of pullback, and then it's flat after that, and then another little pullback. And so there are these periods where it doesn't perform all that well. But the places where you want to look to get in with the least amount of risk and the greatest amount of potential upside are what we call these little pocket pivots, right? So it's uptrend, uptrend, uptrend. You can buy the uptrend if you want, but you're more than likely to step into a pullback or sideways range or consolidation of some kind, and then you're in dead money for a while, and you don't want that. Wait for the pullback to start, and then look for a good green bar at support with good volume, better volume than the day before. That's a pocket pivot, and if it can take out a few previous days of highs, all the better. That green bar right there looks like a good candidate, and it is. See, the volume is higher than the previous day. That would have been a good buy. Over in here, I'm not really seeing, that's a little too high. How about this one right here? There's a good one. Not the best in terms of closing above the range highs, but it does have good volume. And then there's another one right there. That's even better. That's a good pocket pivot, right? So it's within the range of pullback. It's within the range of consolidation. And then when that happens, you're much closer now to getting the next leg higher. There's a pocket pivot right here that did play out for a little while, and then again for a little while, and a nice pocket pivot right there, which did play out quite nicely. And there's a nice looking pocket pivot right there. I don't know why they're called, it's a pivot because it's downtrending, or sideways, and then it moves up. That's the pivot. Why is it called a pocket? I guess because it's inside of the pullback or the trading range. But the key is really the volume. You want bigger volume than the day before. Guys, I've got to let you go. I always go too long, and it's just too much fun. So have a great rest of the afternoon. God bless everybody. I will get a link in the main room to the recording, and we'll go from there. We've got an hour left. Bye for now.